I don't even know if we need the story for the earnings. Scott Bauer has been watching the chart. Scott, thanks for being with us from the CBO as always. These things went to the moon yesterday, or the sun or something. It's like the Elon residual trade or something. What's going on here?
Yeah, it is. And like you said, I don't think we need to go through the fundamentals. I'm looking actually at this at a more technical level here, Oliver. And if you look at where First Solar just bounced off of, it bounced right off of the 200-day moving average. Nice move up. Also, the 50-day moving average just crossed over the 200-day. Not that that always means that's a bullish sign, but that does tend to, the golden cross does tend to lead to a bullish sign. So, from a technical perspective, I love the upside. Earnings release, this is going to be a crapshoot. They're going to show some extra income, some extra revenue from selling off some of the parts of the company, but I love the upside here, and I want to, take advantage. I'm conjuring up a spread here, a very inexpensive way to play the upside off of the report today.
Conjuring up. I like the sound of this. Let's see this witch's brew, Scott. What are we looking at here?
Okay, so the market maker expected move on the print is about $5. Going out to next week, a little bit higher than that. So I'm buying next week's call spread, the February 28th, 60-65 call spread. Do that for about $1, maybe $1.10, somewhere in that range. Gives me tremendous reward to risk. And if we get that, kind of pop above that golden cross and a continuation above that 200-day moving average, this thing has 65 in its sights. Now, if they disappoint, okay, they disappoint, stock goes back down, my investment is limited. I can only lose the dollar I'm investing, but I love the reward to risk in this type of setup.
So when you've got this, 60-65, you're covered on the downside, you limit your gains on the upside a little bit. But I think what's interesting here is, if there's a company that will follow some of the froth in its peers, as Jordan and I were mentioning, First Solar got a boost yesterday, but not the same as like an In-Phase Energy or just the TAN ETF overall that tracks. The ETF is going like vertical now.
Right, so maybe there's a little catch-up that has to come into play here. That's very possible. I don't know that really factors into what the print is going to be here as much as what they say about guidance moving forward. But listen, if guidance does come out and it's real positive, then it does have some catch-up to play.
Hey Scott, overall, you see this kind of like froth that's kind of like moving across the market. Tesla, Virgin Galactic, solar stocks. It still seems to be like there is a little bit of momentum, kind of euphoria building. Generally, what do you think about that? A lot of people say, okay, that's our peak and it's done. I'm not so sure because it just keeps finding a new home every day.
It is really a herd mentality in stocks like a Tesla or, what we're seeing. Or even, look at a Stamps.com this morning.
Right,
had
there it
decent
is.
earnings and the stocks, So it's a herd mentality for these stocks that are just gapping. And people don't want to have FOMO. They don't want to have the fear of missing out. So, you get in situations like this, and yeah, the payoffs can be large, but everybody's got to remember, like you just said, these stocks are very frothy. I'm not saying that these things are getting trimmed today, tomorrow, next week. At some point, they have to come back and trade on some fundamentals or technicals. They really do.
Yeah. All right. Scott Bauer. Hey, at least you've got on the flip side, Viacom and Six Flags down 20%. So at least the entire market's not asleep at the wheel. They're punishing the companies that are stinking it up. Okay. We got to go. Scott, nice, good stuff. We'll watch First Solar around the earnings.
Thanks, Hal.